Okay guys, welcome to the Sovrenfx YouTube channel. So you want to grab your 20 pips and get out of the market and grow your account using this simple strategy. Okay, so first off, I'm going to go over how this strategy works. This is a pure price action strategy. You only use your eyes, no indicators or anything. For only 20 pips, you get out of the market. And at the end of the video, also, I'll be including this in my later videos from now henceforth. After maybe the end 3 minutes, I'll do a recap on the daily trades I've taken with the members of the Sovrenfx team. Okay, so without further ado, let's dive into today's video. Okay, so today's strategy is purely price action, break and retest, and all of that good stuff. Okay, so what I want you to understand is how the market moves. Basically, when you ask your average forex trader to tell you how the market moves, this is how you expect so basically this is how the average forex trader assumes the market to move. But in this movement, provided this is higher time frame, the smaller time frames will create a minor market structure. Okay, so to expand on what I'm talking about, for example, you have a 1 hour candle. Okay, let's say it's a 4 hour candle. In this 4 hour candle, we have the top. Okay, let me have two back-to-back candles so that you can have a better idea of what I'm talking about. So there you go. Okay, so you have two 4 hour candles back to back, close, opening, close. So what you see here is top wick and bottom wick. But if you go to the lower time frames, this is what this market structure looks like. 1, 2, 3, 4. This consists of 4 1 hour candles, 4 1 hour candles. So you'll have 2 1 hour candles, 2 1 hour candles, 2 1 hour candles, 2 1 hour candles to make 8 hour candles, that is 4 and 4. Okay, so you don't have to catch or grasp all of that. This strategy is very simple. So what you want to look for is when price makes a low, it will always 80% of the time go back, a pullback, then retest the low it's already made. So this is market structure. Basically, this is why you have a wick here and a wick here. So if you have two 4 hour candles, you go to the 1 hour candle. This is how the movement will look like. Okay, so that's the fundamentals. Those are the fundamentals of the strategy. From now henceforth, I'll base all my strategies from that. I've backtested it and I've found it to be a very efficient strategy. Okay, so let's start. Let me find clearer examples that can help you understand better. It's basically what other traders refer to as rally base rally, drop base drop. It's one and the same thing, just with fancy names. Okay, so here we have an example. Ignore what happened in the past. Let's start from here. Okay, so price made a low, and according to price action and market structure, we expect price to retest this low. So what you do, many traders would want to have a weak entry, at the week so that they can screenshot it and show it to the Instagram. Personally, I've taken lots of those trades and they end up losing, because how are you going to predict when a week will form? Okay, so what you are going to do is, after the market makes a low, wait for it to retest. So I will assume what's going on back here, it's a downtrend, it made a lower low, so you're waiting for a lower high. So here we have a lower high. Step 1, low, lower low. Step 2, pull back. Step 3, retest. So what I do with this strategy, once the lower low is made, wait for it to pull back, give you your first bearish candle. After that, execute a sell, the stop loss above the current candle wick, and I take profit at the retest. So this gives you, I know you've clicked the video wanting 20 pips and I've given you 50 pips, 60 pips. So this is only on the 1 hour candle so that you can understand the trades better. Let's drop down to the 30-minute candles. Alright, so I'm trying to find a buy. Okay, so using your eyes, you realize that we have an uptrend, and according to market structure or price action, whatever term you may want to use, you have a higher high, higher low, higher high, back to back. That's an uptrend. So this strategy, what's step 1? Step 1, higher high. Step 2, pull back. You only have to wait for a pullback to form. Then how do you know a pullback has formed? Is basically when a bearish and a bullish engulfing, not engulfing as such, but a bearish and bullish candle go back to back. That's how you know the end of your pullback has arrived. Okay, so higher high, pullback, retest of the highs. Long position, I'd take my long position here, have my stop loss below this zone, have my take profit at around the retest of the highs. Okay, so I'm giving you an overbite. So basically, if you want, you'll always take your 20 pips, get out of the market. Stop loss, make sure it's at least a 1 to 2, so have your stop loss at 10 pips. Perfect. Okay, let's look at another example where it didn't work out, so that you can understand why it didn't work out and how you can avoid those instances. It's known as a fake out. Also, I'll make a full video on how to avoid fake outs and how to trade them, but right now let me just glaze over it so that you can see how fake outs work. Okay, so for example, you had your lower low and it formed a lower high, right? Okay, so most people, when they realize price closes above their zones, the first thing they do is buy. And that's, I mean, how can you, what tells you that the trend has been broken? You have absolutely no confirmation that the trend has broken. So what I do to avoid trades like this, it closes above, you take a buy, it moves to hit your stop loss. What I do is, and also a disclaimer, these are not my strategies. This is basically what I've learned in the forex market throughout the years. So I'm not stating this to be my strategy. but what I've gathered. Okay, so you have range 1. If price is in a downtrend, you want to have your range 1, you have range 2 at basically around this area. For now you can just flow with what I'm saying, but the next video will be about fake outs. Okay, so range 1, range 2, then this is where you want to have your third range. Okay, so today I've had trades like this. At the end of the video, I'm going to go over the gold trades that I've taken in the group and show you how I work them out. Okay, so you took your buy, took a loss. How would you have avoided it? This is the range 1, this is the range 2. You always want to have price closing above your range 2. Then after closing above the range 2, price will then move to fill the zone to the next range. I mean to fill the range to the next zone. So this is how you'd expect it. Okay, I know I don't have the best drawings, but bear with me. So this is what I'm talking about. This is what you expect, but price didn't go above range 2. So this is where fake outs come in. Once price closes above, then closes below, this is where you want to execute a sell to fill this range back. This is your first vantage point, this is your second vantage point. So maybe take profit 1 and take profit 2. And if you measure this, you'll find that this is around 20 pips. Okay, so you get your 20 pips, get out. Okay, so basically that's how you trade your fake outs. And I'll expound more on that strategy later, but as of now, let me go over the trade that we've taken today with the group so that you can get at least a bit of insights on how this strategy works. Okay, so this is what happened. Okay, allow me to have my... So beforehand, before we begin trading, I have my ranges and zones. So I had my resistance here, so it was around London session, London crossover to New York session. So with that, this was our zone. Customer. Okay, so this is where I had my first zone. This is where the second zone was. And this is where we had our third zone. This is beforehand, before everything. And then we start. Okay, being a trader, you have to just sit and wait for trades to work out. You get paid to wait. First trade we took was here. Very simple. This was range 1 breakout, no trades. This is a no trade range for me, as this is the method I use to avoid fake outs. Range 2 breaks through range 2, closes above. So this is where you want to take your buy. Have your buy, but not here. You don't want to be in quotes a cowboy and take a trade before the markets tell you where to move. And that's why I've taught you this strategy before, so I can explain how we took the trades today. We have a high, higher high, higher low. Then as usual, 80% of the time when price makes a higher high, it goes back to retest it. So this is where I entered my first trade. Higher high, higher low, closed bullish, perfect setup and entry. Have your stops below here for around 19 pips, then take profit. It goes towards the next zone, that's for 80 pips. When price tapped here, around here, I closed my first trade, then waited. As I've told you, trading is waiting and you get paid to wait. So price closed above, and what happened next? We waited for bottom wick to avoid a fake out. Then we took a long position. So this was late in the day, so we went half risk, so that you can risk only the profits that we've already made. So we had our stops at around 10 pips and take profit. You always want to mark your take profit zones beforehand. So this was the next resistance. When price tapped around 27 pips, we moved our stop loss to break even and predicted a runner, but when price started moving back, since we had already made a lot of pips in the previous trade, we closed it out at around 30 pips to avoid leaving profits on the table, basically giving back your money to the markets. Okay, so we only took 2 trades today for gold, and if you have any questions, you could leave it in the comment section below. Make sure to follow my Instagram, follow my Telegram, join the group if you want to, whatever floats your boat. Okay, so from today henceforth, this will be the backbone strategy of this channel. Basically, I'll be explaining the trades I take on a daily at the end of my explanations and all that. So hope you've understood everything that I've tried to put across. So yeah, have a nice day, trade successfully, let's eat these markets.